All right, let's dive into gold's absolutely wild ride as we head into 2026.
In 2025, gold went completely parabolic, soaring over 70% and smashing more than 50 all-time highs.
I mean, this was its best year in over 4 decades, a top-performing asset, hands down.
But then, right after peaking above 45.50, the market got rocked. So what on earth happened?
Okay, first, let's look at what was behind this massive gold rush. Turns out, it was a perfect storm.
The World Gold Council called it unusually balanced. You had a bunch of different forces pushing prices sky high.
Central banks were buying like crazy, plus tons of institutional money poured in, a huge tailwind.
And then, poof, the party ended. In the final days of 2025, the market got hit hard.
A big part of it was something called a leverage shock. Basically, a rule change forced a wave of selling.
You had margin hikes, tons of profit-taking, and super low trading volume. A really bad combo.
And this is where we find the big paradox for 2026. Two massive forces pulling in opposite directions. On one side, you've got the bulls. Major banks are saying the real drivers from 2025 are still intact.
And they are really bullish. We're talking forecasts way above $5,000 an ounce.
Why so optimistic? Well, they're betting on more Fed rate cuts and that central banks will keep buying.
But what about the other side? There's a pretty strong case that this incredible run could be over.
The bears are pointing to collapsing consumer demand and, maybe, a surprise Fed policy U-turn.
So here it is, the 2026 paradox. It's a tug-of-war between the big money investors and regular consumers.
The World Gold Council sees a few ways this could play out, from a doom loop surge to a big correction.
So what should you be watching? Keep your eyes on the Fed, central bank buying, and physical demand.
Which leaves us with the ultimate question. Is gold just taking a breather? Or is the party truly over?